We do want to get to our committee moves because there are so many of them. So, Bryn, we're going to start with you. This is a big one. You're trimming Apple. Tell us why and why now?
Yeah, well, I think over the last 6 or 7 years, I've been in and out of Apple. It felt like as the iPhone 16 was coming out, I've been really consistent on saying I think the iPhone sales are going to be incremental, not exponential. And I think that we're seeing that. And so I had felt that Apple would be a market performer. And after November and December's really strong performance of Apple, I just feel like the stock on pretty much every metric is really expensive. It's got around a nine price to sales. I think revenues, I think the analysts are looking for 7% earnings growth. I think it probably comes, revenue growth probably comes in around 4-ish. And I just feel like there's other spots I'd rather be. And so starting the new year, I sold half the Apple position and we'll look to redeploy it elsewhere, which we'll get into later.
Wow, okay. How did you make the decision about half of the position? That's a pretty big move.
Well, if you're going to trim a position, trim the position. Part of me is either I own it or don't own it. And so I still like the company long term. I think Tim Cook is great. But I think just doing very small trims in names are not very useful in a portfolio. And so I didn't want to sell the whole thing yet, so I just took 50% off.
Weiss, you also trimmed. Similar logic or different reasons? Are you worried about China, for instance?
Yeah, when China came out a number of months ago and said, hey, we don't want anybody in the government using Apple phones anymore, that was sort of the first indication. But I was also worried about that before because Apple was moving their supply chain to India, so there's going to be disruption. Now, I'd come back, and so I'd cut my position slightly then, but then I did buy into the major upgrade cycle until I learned that they're just going to roll things out gradually, and that's not going to drive anybody to really buy the phones. So I had actually trimmed the shares, and I trimmed small, but I don't disagree with Bryn, except it's been a small position for me, regrettably, because it's been such a good performer recently, and I trimmed initially around, I think, about 210, 215. So, look, for me, the other part of it is I've got so much tech exposure that you sort of have to make choices this year, I believe. Even though it's still the area I want to be in the Mag 7, I still think that you have to take a little more risk control back to the portfolio because I don't buy into this narrative. Earnings are going to be up 13%. Stocks are going to do what they did last year and the year before. I just think it's much more nuanced and all depending upon inflation. And frankly, all the projected policies by the Trump administration relating to inflation are inflationary, not deflationary. So I think the Fed is going to stay on watch, not necessarily cut.
Yeah, I agree with you, Steve. And Bryn, I agree with you, and I applaud the move, too. I think for most of the last 2 years, there's been this plethora of strategists out there who come out with these aphorisms that say you have to own the Mag 7. And I hate hearing that. You don't have to own anything. Look, it's been a great thing to own the Mag 7 for the last 2 years, unquestionably. But, Bryn, what you're saying about Apple is true. I'm underweight Apple. Steve, what you're saying, I've reflected this in Microsoft, which through the fourth quarter I've been trimming. And, Bryn, just to kind of take a dialogue that you started there about, how much do you trim? I would not be surprised, and I'm telegraphing this move, that I would exit Microsoft entirely in the next couple of weeks. This is a time to position. Steve, if you want to be in tech, I'm not saying you have to do this. If one wants to be in tech, there's a lot more attractively priced technology stocks to be in there. You can look at a lot of semiconductor companies. You can look at Cisco, which is also an AI beneficiary. And many people will look at something like Microsoft, I'm not trying to pile on here, and say, well, it should be a beneficiary with Copilot. If that's the case, then why have the earnings estimates been doing nothing but going down for quite some time? Here's the point I'm driving at, just a summary. With what part? That earnings estimates have been coming down?
It's too early to have a referendum on whether Copilot and AI is going to add to their earnings.
Let me finish my thought. Okay, because I'm not arguing with you. It's factual that the estimates have come down. Maybe they go up on the basis of what you're saying, but right now they're coming down. You can find much more attractively priced technology stocks. You can find much more attractively priced other 493 stocks. So when people say to you, you have to own something, it's just not true. Just don't believe it. You may find a reason to own something, but it's not that you have to own it.
And can I just add one thing? what Bryn said that I keyed on is that she's traded the stock over the last number of years as of high. The people that say you can't trade Apple, it's just because they're not traders.
Agreed.
And they don't see it. Of course you can trade it, and it's been a great trading stock. So when it hits these levels that you say, why the hell did it get there? Which is why I sold it, trimmed it. That's when you sell it, and you buy it when they miss a quarter. They will miss this quarter, undoubtedly. The question is, will the market look through it?
Let's hear from Kevin.
Yeah, Kevin, you sold out of Apple earlier than Bryn.
Yeah, well, let's take it back to Apple, because that was Bryn's trade.
Right.
I've sold Apple 10 times over the past 13 years. Most recently, we sold out of the position in December in its entirety. So, and
Early
it was
December?
December 9th.
Okay.
So it was right around this same level when you factor in the covered calls that we wrote. And for all these reasons, we thought this company's, from a valuation standpoint, a little bit ahead of itself. Now, we love the company. We don't always like the price that it's trading at. Bryn, you mentioned the price to sales at 9, which is important, but in like putting that into context, for the past 20 years, they've averaged 4.4. So the price to sales is almost double. PE ratios for trailing 12 months is at like 40, which is very, very high against the historical 24. If you don't like the trailing 12 months, you can look at the forward PE. We had that around 33, and typically that's around 21. So you have a stock that definitely is an amazing share buyback. It's an amazing beneficiary of passive index flows. But for right now, if you're not believing that the 16 is going to be the super cycle, but you're waiting for the 17 maybe for the AI to really roll out, I think we'll get a chance to buy this cheaper. And I love that 215, 210 where you sold it the first time.
And let me ask you both you guys a question. Would any of you be surprised if one day you wake up, given the problems that telcos are having, right, how the stocks are just being shunned, if you woke up one morning and they said, no more subsidies, we're tired of supporting Apple, we've got our customers, all we're doing is creating churn to go to somewhere else and they come to us, and then the others all follow suit. Will that surprise anybody?
I mean, it's reasonable. I just don't know when. And I don't think you know when. You're not saying when.
I'm not saying it's going to happen. But I'm saying that is a risk that people don't assign to the stock at all.
And you've said it before, and it's a rational thing to say. I wouldn't trade it today, buy or sell on that news, on that potential news.
It would surprise me if that happened, but the rationale is that it should.
Yeah.
Bryn, jump in.
Yeah, I think also from a pricing perspective, as Kevin was talking about, if you look technically at the chart, the first support is at 234, the 50 days around 209. And so I think as an investor, be patient here. But I think that this is 2025, we will continue to see a dislocation of prices between this monolith we all call the Mag 7. I mean, we saw it with Microsoft this year, which was definitely an underperformer relative to the Qs in the S&P and then relative to the other Mag 6 names. I think you're going to continue to see this. I think there's going to be companies within that group that I think will absolutely underperform the market. And so to me, when I look at, of those 7 names, I think the one name where you have the most clarity, the most line of sight, still goes back to NVIDIA, right? Because we know that Microsoft spent a ton of money. I don't think you're going to see big monetization with any of these companies this year, except continuing to be with NVIDIA, which continues to get cheaper as their earnings grow.